Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati, and the markets are set for a very huge, volatile times ahead as US inflation prints at 9.1%. And many private estimates in the US by private agencies are saying that US inflation is actually at 18%. This is based on various prices that are being consumed on a need based by consumers. But having said that, I mean, let's go by the official numbers of 9.1%, which is at record highs for the US. I don't think consumers and the Federal Reserve officials have seen such high inflation ever in their lives. So what the Fed is going to do, and that's what's going to affect the markets. And just before we go on to the rest of the bond bites, do not forget to download our app, Quick Invest by INR Bonds, where bonds are especially curated for investors and financial advisors to give their clients, taking into account the uncertain macroeconomic, inflation, and interest rate environment. Download the app now for the best in-app investment process.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Back to bond bites. With the US inflation at 9.1%, expectations are the Fed will hike rates by 100 basis points or 1% in their meeting next week. And this is reflecting in the euro, which has actually fallen below parity. The parity for the euro USD is 1 euro, and it's fallen below that, which is the first time it's happened before the pair was launched. And hence, there seems to be going to be huge volatility in currency markets, and the rupee is feeling the heat, very close to rupees 80. And INR bonds have always been saying that it's a matter of time before rupee touches 80. Gsec yields slightly higher, not reacting too sharply to US inflation, while the equity indices had a volatile session. Not very volatile, but expect much more volatility. In other corporate bond space, LIC gave Indiabulls Housing Finance 10-year invested in 10-year bonds at 9.7%. Now this yield seems to be very, very good for Indiabulls Housing Finance and not very good for LIC, because Indiabulls, as we all know, did not exercise their call option on their perpetual bond, which is paying 10.5%. And their 3 and 5 year bonds are trading at 15% and 18% offered in the market, respectively. Now, LIC, which was listed recently, the price has fallen very sharply, and remains to be seen what LIC saw in giving Indiabulls 10-year bond at 9.7% when all other yields were much higher. Thank you very much for listening in. Do not forget to subscribe to our YouTube channel if you've not done so already.